what we saw on the first trading day of the new calendar year will really epitomise what we're likely to see throughout the rest of 2016, and that is pockets and bouts of volatility within financial markets, which will probably lead to a strong risk aversion move, with the yen being very much bid up and the US dollar doing fairly well. Global equity markets under sideward pressure and fixed income markets doing quite well. And I think people will then suddenly unwind those positions when good news comes back into markets. But I certainly think understanding and harnessing volatility will be absolutely key for traders. And that's going to be my number one point throughout 2016. If you're not utilising and enhancing volatility and implied volatility in your trading setups and as part of your risk management and money management, then I think it's absolutely essential that you look at doing so. When you get these big bouts of volatility, we can move our stop loss further away from the market, we can take our position size down, and it's fundamental as part of any kind of trading plan. I want to keep an open mind on market. We know the consensus is still that equities look to appreciate. The dollar continues to be the one that everyone's looking at the moment, although I like the Japanese yen. And fixed income's likely to sell off to the degree where the 10-year moves up to about 2.8%. But I think we need to have an open mind about markets. I think there's going to be a lot of news flow that's not priced into this markets at the moment. What's going to be the implications of that? And I think, therefore, do not fall in love with a position. Do not fall in love with a directional bias of the markets. Be prepared to change. Do not keep your head in the sand. Let your profits run and take your losses as soon as you can, and do that within part of a risk management strategy as well. Increase your opportunities within markets. Look at foreign markets, look at foreign assets that you've never traded before. Things like fixed income, how does that impact things like the US dollar, and how does the US dollar impact commodities and equities, credit for example. So have a look at asset classes which perhaps you're not so familiar with and get an education, specifically if you are using fundamentals as part of your strategy. Look to increase the opportunities to the downside and the upside. So definitely, if you're not looking at shorting opportunities, get an education about how shorting works and what it means for your portfolio. Some people, look at shorting as a mechanism to profit from sharp downward moves. And I think if you understand shorting, you can greatly improve your chances of surviving and thriving in markets as part of a capital preservation situation, but also being aggressive with markets and looking for down moves. So I'm looking for great opportunities in 2016. We've just got to look at how we can actually achieve those.